So, today's topic of discussion is tax, its types, and its key features. So, basic concept of tax or definition is contribution from individual for maintenance of government. Tax is a financial charge imposed on legal or individual entity of government. In US, tax is called contribution. In other words, tax is compulsory payment on persons or company to meet expenditures incurred or conferring benefits on people of a country. So, why there is a need of tax? Collecting taxes and fees is a fundamental way for countries to generate public revenues that make it possible to finance investments in human capital, infrastructure, and the provision of services for citizens and businesses. In simple words, the expenditures that government has to do for its people is called tax. To make parks, hospitals, schools, so tax is the money collected from people who receive income to provide facilities. The tax and government fee are quite different terms. In first place, tax is a compulsory contribution made by taxpayer. A fee by definition is a voluntary payment. Tax is a direct give and take relationship whereas fee is opposite to it. No one can escape tax. Everyone is bound to pay tax regardless of the circumstances, irrespective of the conditions. But fee is a voluntary payment that if you want to pay, you will. But if you don't want to, you won't. It totally depends on you. Now we'll be discussing the types of taxes. The perfect definition of a tax is a compulsory contribution to state revenue levied by the government on workers' income and business profits or added to cost of some goods, services, and transactions is called tax. Tax. It's a graduated tax. Graduated tax is a tax that increases with income. That's what's also called an expenditure tax or flat tax. Basically, direct tax is really paid by a person on whom it is legally imposed. Impact of money burden and incidence are on the one and same person, and it cannot be shifted to other persons. Examples of direct tax would be income tax or wealth tax. Important aspect of it is that direct tax keeps on increasing with pay. That if it is 100 US dollars, it would tax would be 5%, then 150 tax would be 6%, and if 200 then tax is 7.5. Tax on production, consumption, transaction, import, export, duty, general and selective sales tax, and value added tax are called indirect tax. Examples of indirect tax are property taxes. Basically, indirect tax is imposed on one person but paid partly or wholly by another person. The impact and incidence of tax are on different person. There are two ways to apply indirect tax. Specific tax that we apply per unit value of product and ad valorem tax on value of commodity. I have already explained this specific tax and ad valorem tax in my previous video of tariff and its kind. If you want to know, please go and check the previous video. Example of indirect tax is GST excise duty. GST stands for goods and services tax. That's why there are two ways to apply it, specific tax and ad valorem tax. Basis of methods, we classify tax into four types, but usually we discuss three types because one type is not discussed often. Proportional tax, it is a tax which is levied at same rate at all income level. Rate of tax remains same. Tax does not vary with your pay. You are bound to pay the same tax at every point. For example, if the start earning is 1000, the tax you have to pay is 10%. If it is 2000, tax is 10%. If it is 3010, is tax is 10%. That means tax rate is never going to change. Progressive taxation rate of tax depend on charge income of individual. It implies that the rate of taxation should be increased with increase in income. That is, higher the income, higher the rate of taxation. It is clearly explained by the following example. Progressive taxation contributes to the welfare of society, that it helps to vanish inequality and promotes equality in the society. Regressive taxation, the higher the income of taxpayer, smaller is the proportion of his income. It is just reverse of progressive tax. It is the one in which rate of taxation decreases as tax base increase. It is against the objective of welfare state because it promotes inequality, as it is explained from the example that when you are earning $1,000 you have to pay 10%, and when your increases up to 2000 you are bound to pay 8%, and if it increases further 3000 and 6%, that means it is not. Not a good way, neither an effective way. Regressive taxation is the fourth type. It is usually not discussed, but we have to. Regressive taxation is that people with high income pay less tax as compared to their income percentage than those people with low income status. High income, less sacrifice, low income, more sacrifice. Now, what is the purpose of taxation? This process of resource allocation. That is the process of managing assessed in a manner that supports an organization's strategic planning goals. Second is the income redistribution. It is done to reduce inequality and promote equality. And the third one is economic stability to control inflation. Now we have discussed tax, its types, its key feature. I hope you would have understood all and it will be beneficial to you. See you soon.